Looking for insurance to insure your home or automobile? Please contact Alexia at Allstate, located in New Providence, New Jersey, servicing clients in the state of New Jersey. What's going on? Welcome to Let's Talk About It with your favorite mortgage advisor, Jimmy Mortgage. Today's topic, we're going to be talking about current mortgage rate environment and its effect on what's going on with the Middle East. I got an interesting guest today. He knows it all. He's a top mortgage loan advisor for Guarantee Rate. His name is Arthur Kinsley. He's located in New Jersey. So Arthur, what's going on, man? What's happening? You're a surgeon when it comes to mortgage, so I'm happy to have you here today,
Jimmy. Man. Great to see you. Thanks for having me.
Of course.
This is a great platform. I'm glad that you're doing this.
Thank you.
So Arthur Katusky is my official name.
Arthur Katusky. I jacked up the last name. Okay.
I'm the SVP of Mortgage Lending, and I cover Central New Jersey.
Right.
My history goes back, at this point with the company, 24 years, something along the
over
something
2
along the
decades.
Way. So I've been around. I've been around. Let's say that.
Call center days.
Oh yeah, absolutely. That's you're absolutely right. So for many years we were definitely a call center, and I've been let's say an in-house lender for a big real estate company. Without naming names. Right? That was recently acquired, and now the biggest one in the country. So we're a good sized lender, one of the biggest. And of course, you used to be with us.
Right.
Happy to have you at that point.
Learned a lot from you, man.
Absolutely. Yeah. Glad to help. I mean, I'm always part of what I do is I want to elevate other people. Mm-hmm. I want to help our borrowers. They always need direction. That's what we do. Right.
Okay. Yeah.
We got to find them a place, find them a direction.
Right.
Guidance. A lot of what we do. So go ahead.
No, so I'm gonna ask you this question. So throughout our conversations, I've always known you as a technician when it comes to all mortgage related matters. Can you go into that, and what does that mean?
Great question, because I just read an article yesterday that will kind of question the whole thing that we do here. So what is it that I do? I mean, my whole business is built on fact. I'm knowing things, right?
Right.
I know how to get files done. I know products. I know every which way to get a loan done.
Okay.
Knowledge right now is going to zero.
Wow.
How would you like that?
No, I didn't expect that. I didn't expect that coming out of you.
If you think about this,
right?
What is the biggest topic right now? AI.
AI, right.
Biggest topic, right? So part of the reason I'm doing this wonderful show, and I love the studio. Thank you for doing this.
Of course.
Is the fact that you almost have to be visible. And that's the reason why you do this, the reason why I do this. I used to be a secret agent. Right?
007 author, right?
Nobody knew what I did, but people that knew me. And I still get the referrals from years back, and people find me, and there's advertising, all sorts of stuff.
Right.
But why do they come to me? I was the lender of last resort. I would present in my offices and say, look, I know not everybody's working with me, but if something goes sideways, I'll save the day.
You can solve it.
So I would solve. I'll find a way. I'll get it done. It's usually a 7 p.m. Friday night phone call. Arthur, we went somewhere else and things blew up.
Right.
And that knowledge was there, and I'm proud of what I do, and I've been able to come through for people.
Right. And your numbers reflect that.
My numbers reflect that. Thank you. I mean, there's always somebody bigger, stronger, whatever the case is, but I do well enough, but I can do always better. Right? Always can do better. What is happening right now? Right now, the knowledge aspect is changing in the sense of AI knows everything.
Yeah.
Everything.
It's only as good as much information you put into it too, right?
Right. So that's going to be the biggest question. The question is the producers that are out there and the people watching us know these, see it online, see it on socials, just splashy mortgage people that talk about splashy stuff.
Right.
They may not know anything, but they catch your attention. They grab you.
Right.
And when they grab you, they just kind of guide you towards the system, and the system does the work.
Right.
Not the loan officer. Now, this is going to be an interesting question. Will a consumer trust that system? What happens when things go sideways? What happens when a consumer overdiscloses and says some things that cannot be taken back? Right. Does the filing get declined? What happens in those cases? This is all an ongoing conversation. And of course, there's an article that says in 18 months, we'll be all out of a job. That is a heavy topic right now in our world. In the meantime, we still have a job to do. And there's a lot of tools that we use as a company to help our borrowers.
Right.
And nobody's asking me, Arthur, you're going out of a job. They're only asking about what's going on with my purchase, my closing, et cetera, et cetera, et cetera.
Right.
So part of being a technician is, of course, adapting to the new environment, but also guiding borrowers to find that best solution for them so they can continue recommending my name down the road.
Right, because financial solutions are always the way to win, right? Because in the end, That's what you're here to do. Solve a problem, get families into this home, and at the end, because you provided that good value, they go ahead and use you because it was a complicated process and you solved for that equation.
Yep.
And now they start referring you, and all of a sudden you're just like, hey, this is what I'm doing. It's always been me, but now I gotta take my technician to Let's Talk About It so I can let people know that
Exactly.
when you search Arthur, when they search Arthur from Guarantee Rate Affinity, they know, like, when you see technician, you should think of Arthur.
To a degree.
I mean, why not?
But here's why. Because I also support my business partners.
Okay.
Right? So a lot of them are real estate agents, and I support them. And today in the environment that we're in New Jersey, even though regardless of what you read out there as far as there's lots of houses available, they're not available in New Jersey in certain price points, right? There's condos, you can buy some condos, but they're still expensive. Single family homes, this entire weekend I spent on helping negotiate transactions, proper offer to make numbers that make sense for the borrowers, how to make a purchase not contingent, that means not contingent on sale of any property.
Right.
All sorts of things that go into it. Work closely with the referral partner, work closely with the borrower, and help them negotiate so they can win a house. So as amazing that sounds. And that price point is $1.5 million. You'd be thinking that this is, something affordable. It is not, but this is for some people, it's their first home.
So let me ask you this question. When someone says working with your partners, right? Can you open that up a little bit? When you say work with your partners, in terms of what? Because you have data in front of you? Or is it because you understand the climate that the potential buyers are going through right now to make the deal work? Like, because we want to expand on that, right? Because we don't want to gatekeep the information, but we want to make sure that, again, you're a technician, right? How are you helping your referral partners in that?
Great question. So question one is, let's say there's an asking price for a house of $1.45 million.
Right.
This happened. How much do we offer to win the bid? We know there's going to be 5 offers.
Right.
How much do we offer? What's the answer? And as simple as we'll offer more. Not everybody is able to go to a crazy number, but also not everybody has the cash to make up the difference between the
appraised price and the purchase
price.
Right.
There's so many factors in play, right? So how much do you offer not to overpay, but also to win the bid?
Right.
What's the answer? Do you know the answer?
Well, only you know. I'm just saying.
We have some ideas. Right? We'll look at comparables. We'll look at what is closed in a certain neighborhood. These are the prices. And then you adjust so we know, okay, there's a sale July of 2025. Right? Then you adjust per month. And then you come back and say, okay, if we offer this much up to this point. Now, to the borrower, we say, what is the number that you can borrow that you're okay? If you don't get it, you're happy and you can walk away. That's because there's going to be other homes. There always are. And you have to look at it holistically, right? Because the monthly payment, so these people are paying $3,000 a month in rent, and this payment is going up to $11,000. Little bit of a little bit of a difference.
It's a large difference.
Little bit of a difference, right? So a little bit
manageable, is doable.
Right. So we have to look at it from that perspective. First of all, are you okay with this monthly payment? What happens down the road? Why are you able to do this? So those are the questions that I ask our borrowers, our buyers, because for the business partner, you don't want people to get cold feet. Because sometimes you get scared by it. That's the conversation these days.
To add to it, right? So clearly what he's saying pretty much is that I'm just not going to give you a pre-approval. No, we're going to have a lengthy conversation. We're going to talk about what your buying power is. And because I know I'm a technician, I can solve for that equation because I know where your buying power is because I'm looking over your documents and seeing where you can afford things. I'm talking to my partner, Realtor X, hey, this is what they can do. But if you do it this way, maybe show enough assets this way, and then they can get the mortgage on that end, this will be a winning bid. Is that what a technician looks like to you?
It's one of them. I mean,
one of many.
One of many. Right?
Okay.
So, because you got to remember, some years ago, I was certified to be a first-time buyer consultant through Freddie Mac. And
I did not know that.
Yeah, this was...
Okay, that's what's up, man.
So I don't just handle high-value buyers. I also,
You're for the people.
You have to be, right?
You're right.
Right? So,
I'm learning. Right.
So you have to have that conversation. It's called responsible lending. And responsible, what is this country?
I love that. He said it's called responsible lending. Let's talk about it. I love that. Let's talk about it.
If you think about in this country, We're driven. We're consumer. We're spenders.
Right.
We need to be buying stuff.
We consume the debt. We love it.
We have to be
We
buying
see
stuff.
it. Right.
And I look at people's credit reports and I ask them questions like, what happened here? What happened here? What happened here?
Right.
You don't always have to put down 20%. Maybe you should be spending your money to pay off all your debt.
Right.
Because mortgage debt is way less expensive than consumer debt.
Absolutely.
So we have to have that conversation.
Right.
Because think about this. I want them to sleep well at night after they close the transaction, right? I don't want them cursing me out.
Right.
So I would rather guide them and say, okay, you should be doing this, this, and this. And this is how you get yourself to the place of where you want to be.
You want to be like a conscience.
Correct.
Yeah.
Because listen, everybody in my world want to get a transaction done. We
Right.
get that. But we want to have a borrower that actually is happy with it, right?
Mm-hmm.
Because there's all sorts of layers that go into it. Appraisal is one of the questions. How much
Right.
the house going to appraise for?
Right.
Now, I'm going to ask you a trick question. Who is the appraisal done for?
Appraisal is done for the bank.
Right, for the lender.
For the lender.
For the lender, not for the borrower.
No.
The borrowers think it's for them.
Right.
No,
No.
we're the lender. This is
Right.
our collateral.
Right.
And I always make a funny joke. I'm like, we don't know if the house exists. Does it exist?
No.
We don't know.
Yeah.
Appraiser goes out there, takes pictures. Oh, look, it exists.
Right.
This is the description of it. It's a third party. It is separate from us as a lender. It has to be approved and accepted. And then we know, okay, this house exists, what's going on with it, and we're lending against that house.
Right.
And then you as the borrower have to qualify for that.
Right.
Have to qualify for that mortgage.
Right.
So consumers tend to forget that stuff. They
No.
don't. They think the inspection is the same as appraisal. Completely different things.
They think you're supposed to call you, the inspector, be like, hey, look, make that number look like this. You're like, yo, that's not going to happen.
It doesn't work, right?
Right.
So many years ago, the appraiser independent rules that were passed in 2011.
Right.
We go way back.
Because of the housing crisis.
Because the housing crisis in 2007, we're kind of
Right.
showing our age a little bit, but I lived that whole thing. I remember
1900,
the crash.
baby, it's a good thing.
I sat through the whole thing. I remember the crash. I watched that movie, The Big Short, a great movie. If you have never seen it, great movie.
I love that movie.
Fantastic movie. But that happened, and then rules changed because appraisers are now independent and they cannot be influenced.
Right.
But the good ones, and we as a lender, we keep a list of who the good ones are.
Right.
So because we want to have a good report, we want the transaction to work out. They know the market. They adjust correctly.
Right.
It's case by case, but I don't see a lot of under appraisals. I see some. I had a great situation in Princeton market, for example. We had a $750 asking price, 10 offers. In December, who are these people buying houses in December? What are you people doing? 10 offers, right? And we know everybody involved because it's one of my markets. Our buyer came in at 851 and change.
Right.
Just the number.
Just to throw it off.
Now, luckily, our system is strong enough. I ran it through our underwriting system for the appraisal.
Right.
And I knew it was going to appraise. We said our property inspection waiver, you know this one?
Right.
Say it was given a number of 818. We were happy at 818. 825, we didn't like it. I said, well, okay, considering that, we're going to appraise at 825.
Right.
What did it appraise for?
825.
Yep. But the borrower knew. That's part of being technician,
Right.
To getting the borrower prepared and know that this was going to happen. So they knew. And we got a loan down with 15% down instead of 20% down and no PMI. That does happen. There are options like this.
It's a private mortgage. It's not what you always think. Sometimes you can buy into it and sometimes you don't have to. And this is what Arthur and I talk about this all the time. That separates from bad, good to great loan officers of what we do when it comes to servicing.
Yes, that's the...
Because we speak about that. We preach on it, right? And when Arthur means appraiser, he's not talking about someone coming from Camden, coming all the way up to Princeton to appraise a home. He's saying that with the team he has and the lender he works with, they know how to win for the buyer. Because ultimately, that's what we're here to do. We want everybody to win when it comes to the biggest purchase of their lives.
Correct. It's the biggest purchase, biggest asset,
Biggest asset.
that, right?
Right.
So, and I want to talk. So I'm actually going to give a shout out to Ryan Rosbach, who is in Texas.
Go ahead. Do it, man.
Great guy.
Right.
Been in the business for a long time. He's the one I just saw him on our President's Club trip. And he said, all right, what separates the bad, the good, and the great loan officers? All right. We all know the bad. We know,
Right.
we know good.
Right.
Right. Good is, what is great? Great is the little things you do behind the scenes.
Right.
Like I had a borrower that was refinancing. He comes to me and he's paying $3,600 in insurance. I go, that seems a little high.
Yeah.
All right.
A little.
So, I mean, we don't know. Insurance costs went up in there.
We don't know his record, right?
We think it's a little, it's a little bit higher. So he's trying to save money.
Right.
So I got him connected with an insurance provider.
Right.
He saved $800 a year.
That's huge.
Right. So those are the little things that separates, right?
Right.
Because you're not concentrating to get done. I want to get a transaction done. I want my borrower to walk away, be happy, because guess what happens? Over the years, I'm not out in social media, right? People find me through other people.
Right.
The referral base gets built and built and built. Now that we're in a different world, we have to be out here, we have to show ourselves.
Right.
That's fine. But it's still, these are real people that we know what happens and they can always find me. And that's just part of being great is sometimes doing the little things that nobody else wants to do.
Right.
So that's a big differentiator.
Looking for real estate lawyers servicing all real estate need? Please contact John Georgie, servicing the state of New Jersey. So let's shift things a little bit. Now that we talk about, we expanded on what definition of technician is for you when it comes to mortgage-related matters. Let's talk about mortgage rates. I mean,
This is a good one, right?
That's
isn't
a
that
big
a great
one.
topic? This is all right. Where are they going?
Yeah, where they go? What's
number
happening?
one question: what's today's rate?
Right. You get a call. Yo, what's the mortgage rate? We're
what's
like,
the
yo,
rate?
wait, did you find a house? No, but what's the mortgage rate?
Number
And
one
so
question.
that's the conversation we always deal with. But here's something very important now, right? Because given the fact that we're at war, we're in the Middle East, and conflict of interest, depending how you define it, right?
Yes.
You get it. But we want the algorithm to pick up that word, right? That's important.
Okay,
That's how it goes viral.
That's what this is all about. We're just here for the algorithm. We don't even need me here. That's fine.
So why is mortgage rates where they at? Because when we had a conversation, we were under 6.
Oh, we were just February 27th.
Exactly.
February 27th, that was the bottom.
Right.
On the 28th in the morning, you wake up, it's a different world.
Exactly.
Oh, boy.
So we changed that. So speak about what's going on with oil. And we're bound folks. We look at the market. We see what's going on.
We're students
right?
of the game.
We're students of the game.
Right?
And to be very clear, most people speak on a global aspect of what's going on with the rates, right?
Right.
Arthur and I are going to be speaking about, well, mainly Arthur is going to be talking about locally in the state of New Jersey, what's happening, what has taken effect. And part of it has a little bit to do with the weather, but I'm going to let Arthur break it down to you. What's going on, what's happening, why mortgage rates doing what they're doing right now.
Okay, so.
Loaded question, but let's go.
Absolutely. So again, February 27th.
You know it all, right?
I remember it's February 27th because I had files ready to go.
Right.
Files ready. 28 different world.
I think we were on the phone that day.
That's possible.
Right, because you avoided me and then I came back and I followed up with you.
Not avoid. Busy. Things are going on. There's things that are happening, right? So again, 27th, this happens, right? We don't fully know the full effect, right? And then we'll start seeing the results that following week. We saw the big moves.
Right.
So what is the number one issue is the fact that oil production is being slowed down.
Right.
Price of oil is going up.
Right.
Why does that matter to the mortgage rates you go? Shouldn't that be the opposite? Usual typical effect when stock markets sell off, bonds improve, rates go down.
Right.
But in this particular instance, we saw oil go up. The inflation expectation changed because now we think, okay, everything is driven by oil, everything that we do.
Right.
Therefore, the consumer is going to be paying more. Therefore, inflation is going to increase. Therefore, Fed is not going to lower rates. Therefore, rates are going up a little bit.
They're talking about hiking rates now.
Hiking rates, right, because we have to control inflation. So now we went, instead of being at 6%, we went all the way up to 6.4 that week.
Yep.
We're still somewhere there. We're still about 6.5. Now, historically, year over year, we're better in 26 than we were in 25.
Correct, yeah.
But between the weather in Northeast, New Jersey, a lot of snow, a lot of storms. Things slow down a little bit, right? Rates, some consumers pulled back because again, you're not quite sure what's the next steps, what happens. There is some thought about jobs. Also goes back to AI conversation, right? There's definitely some thought of that.
Yeah.
The biggest thing in New Jersey, what supports our market, is the fact that we really don't have enough affordable housing.
Yeah.
And the fact is, no one is building it because it's just not possible. The land is expensive, construction costs are expensive. We're building everything in the millions, right? So there are avenues. We have certain products. There's certain avenues that we can kind of get a borrower into it or buyer into certain homes. 20% of condo communities are low to mid income. Did you know this?
No, I did not.
Right, so 20%. It was a mandate many years ago because the government wanted people to have ability to get into a property. So 20% of lots of communities have that act. You can get in there. It's not easy. There's income restrictions. It's one of the products that I also cover. That I don't talk about it, but certainly this is
today you're going to be talking about.
What we're talking about.
Yeah, you're talking about. Right. Let's talk about it. Right.
But this is one of the products. There's different avenues. Now, why do we care? We care because the move-up buyer.
Right.
It's the move-up buyer. The first-time buyers get in. They become the move-up buyer. They buy homes down the road. Right. So the inventory itself in New Jersey is very sparse. For example, this weekend, was only one house for sale in that neighborhood, right?
One house.
One house, that's it, in the 1.5 range. The listing agent did a great job listing it correctly. She listed it correctly. The price was spot on or what it should be. But because you have multiple buyers, price goes up. Now, to the buyer, you get scared about, why am I paying more?
Right.
Well, you're basically paying for the ability to own in this neighborhood, and you also become the last comp.
Right.
You're your last sale. Then whoever lists it again is going to look at your comp.
Right.
And compare it to that. So you sort of support yourself. And
You set the market in some ways.
You set the market in some ways because
Right.
there's not a lot of inventory.
Right.
The biggest driver of real estate and housing generally is employment, however. That is what we need to be watching.
Right.
We're lucky to be in New Jersey where we are. We have New York.
Right.
We have
Pennsylvania.
FDA,
Right.
We have pharmaceutical industry.
Right.
We have financials.
Right.
We have production.
Metropolitan.
Metro, right?
Yeah.
Exactly. So in that respect, we have a lot of industry where we are protected in certain ways. And we're also the most populated state in the country per square mile.
And we have productions coming over like Netflix, right? All those things being
That is
owned.
true.
A lot of things is happening in New Jersey.
A lot of things
right?
are happening
Right,
in New Jersey.
right,
So
right.
New Jersey is doing great,
Right.
and the demand is not really slowing down.
Right.
It has not slowed down since 21 pandemic years, right?
Yeah.
So 20, we lived through the pandemic. We saw March, right? March
Right.
2020, survive in advance.
Yeah,
right?
yeah, yeah.
It's March Madness.
Yeah, March Madness, right.
Survive in advance.
Right.
We've been advancing,
Right,
and
right.
prices are up. The bottom was October of 2019. That was the last bottom.
20, yeah.
October 2019 was the last bottom.
Yeah.
So if you bought in October 2019, you doubled.
Just like that.
Doubled. Yep.
So usually home appreciation goes anywhere between 2 to 4%, maybe 6, but he's saying you double. Make
double,
that so. To what he's saying, that's how much more you need to have to purchase your home. We're not discouraging you, but we're just saying if there's an opportunity and you're talking to either one of us when it comes to this is what you should do because this is how you're going to get into the house, best believe it. It's probably
Yep, that's one of the conversations. Now, in retrospect, the employers raised incomes. So that helps. So
Right.
when you look at it, so for example,
Some employees.
some
Right, let's
employers,
get right, 'cause
some
right,
employers,
because
but,
this is-
but
right.
I have buyers that have been in the been buying for a year, and I know their incomes have gone up. Especially I remember 23 to 24, 24 to 25.
Right.
I've seen incomes go up to catch up.
To get-
So effectively, even though the housing payment seems higher,
Right.
the incomes are higher. So your debt to income ratios are pretty much the same.
That's what they're calling stopping the whole world of inflation, right?
Right.
We want to make it simple for the crowd, right? Just get for some who don't understand what
Exactly. So you're making more, but you're spending more in the
Right.
same place, right?
Right.
So the people that are spending $11,000 a month, the debt to
Right.
income ratio is still 36%.
Right.
They're still in the same place.
Right.
Do they want to spend 1.4, 1.9? No, they don't.
No.
They want to spend 1.25.
They sticker shock like, whoa, what is this, right?
But that's the reality, right?
Right.
So it's a certain reality, and
Right.
I always talk about, look, consumers call me and I want to buy a property. It's for investment. It's not an investment. It's just a place to live.
Right.
Look
It's
at it
shelter.
that way. Right? It's shelter, right? I mean, it's obviously it's a nice home.
Right.
Really nice home.
Right.
It has,
Right. It has a big windows,
It's
right?
a nice, very nice home. You're definitely getting some for your dollar, right?
Right.
But from the perspective of it's only an investment when you sell, but when you sell,
Right.
you typically move on to another property.
Right.
So overall, you're still in the same place. It's just a nice place to live for you and your family, and that's
Right.
so that's the conversation. The reason my voice carries more voice in that conversation than the agent, because the consumers think that the agent has something to gain, whereas I don't necessarily always have anything to gain. I give them a real answer. This is let's talk about it. This is what we're talking about every single day. Right?
I like to say
Every single day we're talking about this because we need to make sure that they don't get upset down the road, that they know what they're getting themselves into, right? So
You're the financial advisor at that point.
I have to be.
You have
Fiduciary
to.
responsibility,
Right, exactly. Yeah.
Because my name is on the application.
Right.
My name is in the mortgage documents.
Right,
And I
right.
stand behind what I do so that I can sleep well at night.
Yeah. No, to your point, right? You say it well, where in the end, you're looking for the beginning, the middle, and after throughout the process, just because you want to make sure they're financially equipped. We don't want banks don't like when you foreclose on a home. We don't want to put you in this situation. That's the last thing.
That's the last thing anybody wants to do.
No one wants to deal with that. So to your point, this is why you have a strategic plan for each on where they need to borrow, where they need to go with their information on what they can or cannot do.
And listen, as bad as that sounds, I ask the question of why are you buying right now?
Mm-hmm.
What's your motivation, right? Do you need to buy right now? Can you wait?
Mm-hmm.
Is this the smart thing for you to do? Because inevitably, it's going to come up.
Mm-hmm.
If they cannot answer those questions right now, that is going to come up, and we better know this now versus later. So we want to prepare. Because this is not a car.
Right.
This is not a lease.
No.
This is a long-term investment.
Right.
It's a long-term position. You want to be sure you're doing the right thing. And what's behind it, we've had situations where, couples who are just getting together living with family,
Right.
they want to go and buy together. And I go, is that really the best? Maybe you should rent first.
Right.
because that's life, right?
Right.
That's the reality of it all, right?
understand it,
So those are the conversations that need to be had, because then, the business partners, the realtor partners, they're not spinning their wheels. We want real buyers, because there's a lot of buyers, not enough listings. And if you're out there thinking about selling, it's certainly a good time to sell, but you have to position your house correctly.
Right.
The way that it works, and that's also a conversation I have with listing agents, right? If you overprice it, everybody sees it, everybody knows it. So you have to be careful not to overprice it. You have to price your house correctly, then it will sell. There's always a buyer for it. It just depends on the price.
If you're looking for ISAs and marketing, please contact J. Lopez Enterprise, servicing all 50 states. Going back to the potential buyer part, right? We work with a lot of first-time home buyers.
We do.
I think I want to be very clear on what authors are going to say, and him and I both align in this. Your first house is not your dream house.
It's usually not.
Usually not.
Usually not.
But I feel like sometimes because of conversations you hear from family, and what the Google machine tells you can do. The influence is right. They give you a permission to say, you can do it. Arthur, can you break down responsibility of what you're doing when you speak in the first time home buyer? It's very important. It needs to echo. So make the statement strong, man.
Well, thanks for putting me on the spot.
Oh, you have to, man. Let's talk about it. This is what we're doing. This is what we're doing. I'm giving you, this is what it's about.
Again, I asked the difficult question that nobody wants to hear. What is this? I just had this call with a client last week.
Right.
She has 3 jobs. This woman works 3 jobs. She's a home health care aide. She's got 3 jobs, makes all this money. She's got all this debt. She's been reading books about buying houses.
Hopefully not Dave
Hold on,
Ramsey.
she's paying rent. Right? She's paying rent, $1,500 a month. And I go to her, shouldn't you buy a house for yourself? No. I want to put down 20%. I want to buy a multi-unit. I want to be this. I want to be that. I'm like, well, hold on. You're going to stay in your rental? Yes, I don't want to move from there. Why? That is not the move. The move is this.
Right.
You go FHA. You put down 3.5%. You're a first-time buyer. You buy yourself 3 units.
Right.
You pay off all your debts.
There you go.
And then you have still a bunch of money left for reserves. Those are the conversations you have.
Right.
Did she listen to me? I don't know. We're gonna find out. But I know with age, she was looking at multi-units. Right. She's got. We want to get her into a 3-unit property somewhere in the 700,000-800,000. Have to be realistic.
Right.
And amazingly, she was looking at a property while I'm already doing a transaction on that street next door. So that's how closely I'm amazingly closely involved in transactions.
Right.
That I don't even realize. Like there's I have one investor buying here. There's another investor selling here. So it's part of being in the market, knowing people that are in the game. Right. So that's part of being kind of supporting the people that support you, being there and giving proper advice so that you can tell, I know this house is worth this because of this. We just appraised the one next door and we know what this one is worth. That's the amazing part. And it kind of, if I'm looking back, I'm like, this is why I do what I do, because of these kind of situations.
So when they say, this is common, right? You see this a lot. When some say Gen Zs, they're priced out. Like, how do you give the confidence, like, in some cases, you can be.
Yeah.
But this is what we do to solve for that.
So it goes back to the difficult choices that we don't want to make as consumers. Don't want to make it. We want to be out there partying, want to be popping bottles. That's what we want to do. Right? We want to be in Miami on a boat. I get it. I want to be in Miami on a boat too. Who's going to pay for the boat? Nobody wants to pay for the boat.
The bill comes. I'd rather get arrested.
Listen, but when I was, my younger days, I lived with my parents.
Right.
I saved up money. I actually bought investment properties, Carolinas, when you can buy cheap.
Right.
Flipped them, made money that way. And that's when I bought my first place.
Right.
So there's other sacrifices you want to be making. Now, I know some younger generation that are certainly hustling. I know the hustle.
Right.
Sometimes you got to put in the harder work. Sometimes you have to make adjustments. Sometimes you don't necessarily need to be living in the most expensive building. Maybe you do live with family.
Right.
Maybe you save up in a different ways. Maybe you're not spending $8 on a coffee.
Right.
Maybe you're not doing that. I don't know, but it's not. I'm not spending $8 on a coffee.
No, I can't spend $8.
But I know people are doing that. Maybe you do little sacrifices to kind of save up some money.
Right.
There are products that exist. Again, first-time buyer units exist.
Right.
They're tougher sometimes to get into. Maybe you have to live a different part of the state.
Right.
There are different areas around New Jersey where you can buy less expensive properties. Now, what tends to happen? Barbara Corcoran, from Corcoran Real Estate, said this many years ago. She said, in order to find out where people want to live, you go to like a trendy coffee shop and you find out where where the baristas are living, right? Where they go. Where's the kind of the communities that are coming up, right? So this is like Kearney is actually coming up right now. Like we've heard this before. We've heard other areas that are kind of coming up. That's how you want to move into those areas. Those are the ones that appreciate. That's how Newark came up. New York started coming up, whereas some properties in New York selling over $1 million. You never think that, right?
Yeah.
So there's definitely opportunities.
I'm still like shaking my head at times.
It's the question of level of sacrifice that you're willing to do, right? But this is still the greatest country in the world. It still has opportunity, and the housing does exist. There's definitely homes that are on the market right now. Not every property in New Jersey is sold today. They exist. Is it the best neighbor? Is the best this, best that? But maybe sometimes you just make a little sacrifice along the way and you build your portfolio.
Yeah, that's how you manage money. And the reason why we having this conversation, right, is because, yes, I understand we're in a world of we need it now, we need it now, we need it now.
Yes.
No, you can measure your now with getting something so you can add to it. So when that now becomes ready, you're able to afford it. This is what Arthur eloquently is explaining. You don't have to be in this neighborhood. You don't have to have a 4-bedroom. You can go 2-bedroom, 1-bath. Is it sexy? Is it something that you always wanted? No, but it's a sacrifice that you can afford, and you are living in a world where you can still do a little bit of vacation and manage unforeseen expenses when it comes with a home. Because keep in mind, a home is also a liability. And we want to make sure you're financially sound when we're having these conversations. So when you see some of these influencers or wannabes or whatever you see out there, Gen Zs, I'm not picking on you. I'm just letting you know. In the end,
we know. We know.
Right. Just bring it down a notch. Just deal with the reality. You make this and you have this and you're spending this, but you also want a house and you want to build on it. Let me tell you something. And the only way to advance in America today is by 2 things: owning a house and owning stock. If you don't have neither of these 2, I don't understand how you're going to make more and live comfortably. So we're saying if you're not ready to buy a house, it's okay. Take some of your excess returns, apply it to a stock, so when you're ready to sell, you have that down payment to support the purchase of your owners. You become owner. You're part of that American dream. Now, when people describe it, I can do this by house. Look, if you're not ready to buy a house, it's okay, and we understand that. Like, look, I'm better watching you spend a year saving your money. Arthur, again, the technician who he is when he says it comes to mortgage matters, he'd rather watch you save in stages so when you are ready, that pool becomes available to you, because then you have products, then you have options, and then you have, maybe things may change by then. Many different things can happen. And so this is what we're saying. This is what this is about. Educating first-time home buyers about the process of purchasing a home.
This is, and you're absolutely correct. There's certain sacrifices need to be made.
I
mean, I have younger buyers who are well prepared, well educated, have the 20% down, right? Sometimes they're priced out too. We see that as well. But they have the opportunity, and they want to get what they want to get. But sometimes you don't always get what you want. You always get what you need, right? So we know the song, right? But that's the current reality. I've had buyers who actually leave the state, go somewhere else, and try to buy it somewhere else. So it's a case by case. You don't get discouraged. There's always opportunity out there. You have to be in the game, and that's how you build wealth. You've seen the charts, right? If you're a renter versus if you own something, right? How much your net worth is significantly in real estate. Anybody who is rich in this country, they tend to own a lot of real estate. They tend to own a lot of stock.
And we'll go back to paying attention to the baby boomers, right? When their kids are buying a home, they're buying a house for 1.2, 1.3. But guess what? That tsunami effect, mommy or daddy or grandparents are giving them $600,000. So now their mortgage is only $400,000. We see it. And that's a great thing to do when you're in the position to give your kid down payment monies to watch them purchase a home. So to the point is that it comes from different facets, but you can only control what you can control, which is your own income, which is your own ability to afford whatever that life is. And this is the conversation.
I mean, also talk about I have a young son coming up, right? So student loan debt.
That's another.
Big issue in this country. Like this is, if knowledge is going to zero, if the cost of, if the value of knowledge is going to zero, do you need to be spending money on college education? This is going to be a conversation, right? What do you get for it? That's kind of maybe different, let's talk about it.
Right.
But that is certainly the college education cost. I mean, I've seen borrowers with $250,000 coming out of law school and they're making $75,000 a year.
Yeah.
And they're stuck. So we've seen these kind of situations. You have to be careful about what you're putting your money into, just like buying that $8 coffee.
Yeah.
Should you be spending $100,000 a year, if you're lucky enough and parents pay for it, right? Is that, then you're okay, but is it maybe, do you take that money, put it into something else? So there's all sorts of conversations that exist. I don't go that far. Like that's a little. We don't go that far, but certainly we have younger generation, the millennials, that are looking, the Gen Zers that are looking to buy, and the parents are helping.
Right.
And the parents kind of want to influence. They want to influence where they should be living. I just had this conversation with a partner, with an agent partner yesterday, where the mom was hands-on in the looking for the property, and she wanted the son to live in a certain area and not here, not there. And okay,
I get that.
We get it. But there's a certain place he has to live there, not the mom. Right. Why is he buying a 3, 2.5? It's just him.
Right.
Maybe buy a 2, 2.
Right.
So those are the conversations that we have. That doesn't always kind of get to me, but sometimes if they ask, because I see it. Right. So I provide. It's the life experiences, but also long term. It's your first house. Statistically, 5, 7. Maybe 9 years you're going to be living
maybe
there.
a strong
right?
9, yeah.
But usually 5 to 7, and then you move on.
Right.
That's what happens. So we have this holistic conversation. The mortgage becomes almost it's a secondary conversation, because a mortgage. What is a mortgage actually? It's a vehicle.
Yeah,
it's a vehicle to help you buy something, right?
It's a paper where some make money off of it.
Some make money. Yes. Some along the way. But I mean, this is how this the securitization of the mortgage market is how the economy was built. Right. It's big, and that's what helps you to buy a property with 3% down, 5% down.
Right.
There's 0% down of financing. So all those exist out there. If you're smart about it, you find ways. You work with proper people, and that helps you see the light.
You mean great loan officers like you and I?
Absolutely.
That part. Go back. Because remember, there's some bad loan officers, and there's good loan officers.
And there's
the great ones is right here. This is what we're talking about, and it's important. Again, look, the noise is the noise. You're gonna. It's there. It's unfortunate, but this is the cloud we live in. Pick up the phone, have conversations. Again, Arthur's telling you, he's going to listen to what you're going through. He's going to listen to what your path is, and then he's going to help you understand how to get to that path. And this is why you have these deep relationships with your partners, because again, you verified those conversations with your potential buyers, and they trust you because every time you give your partners something, when it comes to the borrower purchasing the home, they're like, Arthur, thank you so much. And this is why your numbers reflect today.
So I have to deliver for my business partners.
Right.
Because that's their paycheck.
Yeah.
Right? So this is that's what it comes down to. So they have to rely on me telling them something. So I don't have the opportunity to say yes if it's really a no. I don't fib. And that's part of how I made my business work, my reputation. I'm the lender of last resort. I don't want to be. I want to be your first choice. I want to be your first choice. Right?
Let's talk about
it. But in reality, the cases when the referral partners allow it to go somewhere else, and it comes back to me, and I have to save the day, and they know that this is Arthur's got your back. So it's a way to make it work.
If you're looking for a title company that's easy and no headaches at closing, please contact Allan, Chief of Staff at Simplicity Title. They're covering the state of New Jersey. On the final note, let's complete the sentence. Finally, can you? Let's see if you can complete the sentence.
This is unexpected. Here we go.
Yeah, there you go.
This is new.
There you go. The buyers who win in the market are the buyers who. The buyers who win in the market are the buyers who.
I think the ones that listen to the partners that they work with. So the team. So it's having a team. That's what I do. So I work with a real estate agent who works with a good attorney who works with a good title company. Right. That's the combination.
That's
the combination, because then I see the text messages. I have group text messages where the buyers thank us for what we've done for them.
Right.
We may not win the offer, but they know we've got their back, right? Because we see the response from the listing side where you say, look, you guys did everything you could to try to win this deal, right? Do everything. So the buyers that listen do great. The ones that know everything, that becomes difficult because nobody knows everything besides, of course, AI.
Well, again, AI is only as good as the information you put into it, right?
Yes,
so
yes.
it's giving you perspective on specifically that part,
Correct.
but not the entire situation.
Correct. There's
of what's
no. We've
involved.
seen a lot of
Right.
bogus answers.
Right.
I put something into about a town. I didn't even know how to spell the proper name of a town.
Right.
So you'd be surprised what kind of data
Yeah,
comes out.
it is because
Yes.
Sirhan the other day was beefing because someone they thought they were offering too much.
Yeah, I
they
saw that
spoke
story.
to AI.
I saw that story
Sirhan
as well.
was like,
The
"What the hell are you
50
talking about?" Yeah, right.
Right. This is they use. I've had real estate agents being interviewed with ChatGPT as the backend. I saw the text message, and that data is not always correct. You have to
No.
be careful what's out there.
Right.
You have to check. But in the reality is, I know specific streets in certain areas where we know what the prices are.
Right.
And that's how you have to price it correctly. That's how you know how to offer correctly. And if you listen, you do well.
Right.
If you try to go around, try to find your own ways, you can. The DIYs exist, right? But sometimes you need experts.
You're at risk. You will
Experts
be at
go a
risk.
long way.
Right,
Yes.
right. You will be at risk, and it will cost you more than what you think.
Tend to do, yes.
Yeah.
We know that FSBOs, when you try to sell a house yourself, you don't make the most money. It's the same thing when you're trying to buy. You kind of get it pushed out.
Right.
So you have to work with the proper people that know each other.
And keep in mind, statistics matter because we're always looking at what the FSBOs are doing and what a realtor is doing to maximize, in both places to make sure everything runs well, as returns on both sides. That said, look, in conclusion, Arthur, I appreciate you coming on Let's Talk About It. But more importantly, we talked about markets. We talked about first-time home buyers. We talked about strategy. We talked about what Arthur wakes up every night thinking about and how he saves people's lives when it comes to mortgage matter, that mortgage technician. Look, we covered everything. If there's anything you need to know, as always, tap into Let's Talk About It. But Arthur, if someone's looking for you, where can they find you, man?
So obviously, I exist on.
I exist.
on Google.
No, you were just here today.
I exist. I have a website. Can I say what?
Yeah,
it is?
you absolutely.
So
you
I
have
am,
to. This is about you, man.
I'm the SVP of Mortgage Lending for Guaranteed Rate Affinity.
Right.
We are the embedded lender with a large real estate company. I'm not going to name which one it is.
Right.
But a large real estate company. The phone number will be provided. The contact information is going to be provided.
Okay.
You can Google my name, Arthur Katusky. I cover several states. We as a lender cover every state.
Right.
We have pretty much every single product under the sun.
Okay.
So if I don't know something, I can guide you in the right direction. And it's not always about transaction. It's just about finding people that know people, referrals and things like that work out.
Again, look, I work for a different company. He works for a different company. But when it comes to making sure our client gets what they need, we both work together. It's nothing where we're competing. No, it's okay.
Correct.
There's enough business for us to expand our growth and our value. This is why I'm happy to have Arthur come on. Let's talk about it, to talk about his direction on what makes sense for him and his partners when it comes to solving all mortgage matters, right?
Yep,
I love
absolutely.
it.
Thank you for doing this.
Of course.
Very nice.
Everyone, if you're looking for Let's Talk About It, Jimmy Mortgage, as always, you know where to find me. Arthur, again, thank you today for coming on Let's Talk About It.
Fantastic.
I appreciate
This is
you.
awesome.
Yep.
Thanks, man.
Hey listeners, are you looking to improve your home comfort and save on your energy bills? Let's talk about Seal Power. They've been awarded Energy Star Sustained Excellence Award seen on Good Morning America, the New York Times, and World News. Seal Power is dedicated to keeping your home cozy while saving you money. Check out their website for tips and incentives and more at CIELPOWER.com. Stay comfortable and save with Seal Power, where comfort meets efficiency. Follow them on Instagram for updates and more, and Let's Talk About It as well. Thank you.